Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Thanks for joining us in this strategy webinar at Admiral Markets. Glad to be here. Looking forward to take a look at the markets. Looking forward to look at the price action in just a second. First of all, though, be aware that this webinar is shown to a global audience, yet may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more information about that. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Plus, you're aware of the risk involved when trading. All right, so our focus today is going to be on strategy. I wanted to actually take a look together with you at some financial instruments, some Forex pairs, and maybe some indices. And take a look at, sorry, that's the wrong one. Take a look at how to basically analyze the markets in 3 steps. Ned and I talked about it during the Forex Expo 1.5 weeks ago. We outlined, how we look at the process of trading. Step 1 is analysis, and I mentioned 3 steps, and I wanted to dive into that a bit more. Our seminar was 30 minutes, and we talked about, I think, quite a lot of points. So obviously we were trying to cover as much ground in a simple manner as possible. That's not easy in 30 minutes. So I wanted to dive into that a bit more. But before we do that, let's take a look at the calendar. We got Swissy GDP. We had Aussie GDP coming in stronger. Green numbers. Difference is quite substantial as far as I can see. And we see ADP in the dollar. That's going to be, of course, interesting to get some info about perhaps Friday. What direction is the U.S. economy going in this election year? And of course, yesterday, by the way, regarding elections, there was what is so-called Super Tuesday. Many states voting for their candidates in both the Democratic and Republican race. And let's see what kind of impact that will have. There's a lot of 12 states does tell us something, but we still got many states left. So let's see how that will continue. I think the next one is a week from now, and then 2 weeks from now, there are a lot of states again. I think 2 weeks from now, there's some bigger states like Illinois and Florida, I think. So that could be probably the next milestone or important stepping stone. All right, let's take a look at the heat map. Friday, therefore, non-farm payroll, by the way. Let's look at this map and see what's going on. Well, we got a pound yen. Ooh, that's a big one, right? A lot of movement there and a lot of volatility as well. So other yen pairs all rising to the upside. Now, that was expected, not something I traded on the dollar yen myself, as you know. But the pound yen did lean itself nicely. I'll show you that. We discussed that one yesterday. Did anyone take a pound yen setup? Actually, did anyone join that trade? Just out of curiosity. If not, no problem. But just curious. We do see high volatility here because look at these markers. They're at 2.5%, not at 1%. So, we're talking about a substantial market movement yesterday. And we had some CAD weakness still, despite the divergence, CAD going lower. And that's the danger of trading reversals. You see divergence, but not always does it really take immediate effect. And that's something really to be cautious of. All right, so the CAD and the yen were really big movers. Let's see, we can see it probably here. Well, pound is typically the number 1. Yes, it is. Aussie coming in second, yen third, and the CAD fourth. You see CAD and yen pretty high for their standards, being in the top 4 is showing a lot of movement. All right, so let's take a look at these charts. Goody good. Wanted to take a look first of all at pound yen. And I will dive into the 3 steps of analysis in just a second. But first I want to take a quick look at the market together with you. The pound yen is something we talked about yesterday. Pound yen was, I don't have my drawing tool. Just bear with me 1 second. Basically, when you look at this chart, pound yen was taking the second move up. So you see 2 impulses to the upside, right? and it was making that second move up there. And I was saying, well, if I'm interested in taking a long, I would like it to finish with a strong momentum, let it make a good push, let it make a triangle correction, let it go sideways a bit, go back to those moving averages, and then bounce. I'm not sure if anyone was here or if everyone remembers that particular part. And this is not to, you know, I'm not saying this to necessarily boost about look how great I am in analyzing here or trading, but I just want to show you how you can use those moving averages to your advantage that we talked about yesterday, because yesterday we were talking about moving averages. That's why. Just want to show you how you can understand the market structure a bit better and show you how it looks like what I was explaining yesterday. That's all. Right? Not boosting, just want to show you the pre and post fact situation. So when I was talking about the market here, right, I said I would like to see a strong push because we are at resistance. And look at the tunnel here, 144, 169 EMA closes, acting as a stopping spot indeed. Price going just a tad through it, right? That could happen, right? So price kind of, first of all, showing its ability to retrace, then the failure to continue here, and then the break going right to the second break, I should say, right? Going again to the tunnel. Tunnel acting as resistance, price retracing from it, but what does it do? It bounces back at support. So it gets squeezed in between these long-term moving averages, right? Between the long-term and the short-term, right? It gets squeezed in. Stops at resistance, stops at support, and then finally breaks and makes that good continuation I was talking about yesterday. Here, here actually, that's one of them. But I was actually talking yesterday when I was talking about the fact if it can make a bigger move up like that. Then, if it shows this momentum, right? A triangle, consolidation, a flag, back to the 21 EMA band, and that would be then a bouncing spot for further upside. And that's what happened right on this candle. You can see good momentum, good correction, and price. The 8 EMA turning a bit, and then turning back up again. This candle, that's the candle where the 8 EMA turns back up, that we see the continuation, and the price is up, has been up to 90 pips or so, versus about a 40 risk, 50 risk. So it's in a good position. Price, the trade can be really moved to roughly break even. The low, this candle low can be used. Why this candle? Because it's a candle that is a dominating candle. It's a 75 pip candle on an hourly chart. Is dominating enough. It's a master candle. It's strong enough to say, okay, in my opinion, will use that low to trail stop that trade. If it's not a dominating candle, if it's a smaller candle like this here, or if it's indecision candles like here, typically I will not use it unless I'm really close to my take profit. In this case, it's an excellent position to say, okay, wow, within an hour the trade went my way, and I can already almost reduce it to zero risk. Excellent. So if you remember the trade management rules I use, if you were in the webinar last week, right? First, be patient. Try to eventually, though, move it out of risk. Then get patience again to let it go to your target, and then become more demanding and try to catch as much as profit as possible out of that. So now we're in a phase that we're back, we're out of risk, and we can be again a bit more patient. Excuse me. So what kind of patience are we talking about? Well, here you can put the fib on the first leg, and you can see a 61.8 fib bounce at on the pound yen here. Sorry, at the golden ratio. So the next target, well, could be 160.92. Now I would like to take a look at perhaps the pivot points could be useful. Let's see. Hang on, folks. I will do that on other screen. So let me check on that. But that would be the next target. We stopped at the minus 272 target, as you can see. Right? That's also what I said yesterday. Right? We can get the stopping part. We can get the stopping spot there. See the consolidation after hitting the minus 272, and then continue up to the minus 61.8. That often happens. So That would be the main target, but I would like to confirm with the pivots, and I'll get that in just a second. Now, on a 4-hour chart, it would look like this. Basically, price is had failure here. We had divergence between these bottoms. So when there's that divergence between the bottoms, what happens is basically that price, there's a chance of price getting back to the long-term moving averages. So what it did here basically was show the first momentum up. That could be a wave A for those that like waves, and this could be a B because it's corrective, and this is probably the C of a zigzag correction that is occurring partly because of this divergence, right? And this was the first part, back to the 21. This was the failure to break below the 21 significantly, and the C part is probably going to take price back roughly to the tunnel area. The first target is the 272. The second is the minus 51.8, but it could go as far as the minus 100, which is equal to that tunnel. So this is how you can piece all that information and basically find that trade that happened 2 hours ago right there that I talked about yesterday. All right, is that clear? Does that make sense? And the reason why we had momentum here, why that was important, was to show, okay, on a 4-hour chart, we really have the ability to push away from this 21 EMA. And when we do that, then there's a good fair chance to fill in this space right here, which is a reversal trade on the 4-hour chart. Does that piece together here? Any questions? On the 4-hour chart, you can see clear momentum, right? Higher lows, higher highs on the 4-hour chart here, just like what we had here. Daily chart yesterday was a bullish candle, engulfing twins. And as I said, the 21 EMA band on the daily is the next resistance, and that equals basically the 4-hour tunnel. All right. So that was a trade setup mentioned yesterday. Now, if you're in it, I would like to know, just out of curiosity, but if not, no problem. The pivot points actually are going to be renewed in 2 minutes, I just realized. So let's wait for those because today's pivots are just about to be ended anyhow. 1 minute to go, and then we got the London pivot points, or I should say the pivot points for the new London trading day. So I don't think it makes sense just to say it now. Let's wait 1 more minute. Good morning, Beverly. I think that maybe you looked at this trade, Beverly. Maybe you were not here when I just started. I was talking about the pound yen and the fact that there was momentum. I said I was looking for this momentum here, then a triangle back to the moving averages, and then a bounce off the moving averages. And that this candle here shows the ADMA turning again. And that setup basically can be moved to break even. Now, so far, no one has said that they're in a trade or have looked at this, but maybe you have. I remember that you were in the webinar yesterday. So maybe you remember that I said the impulse and then correction back to moving averages and bounce could be the starting spot of this 4-hour, making its way back to the long-term moving average after divergence. That was what you missed, basically. All right, so anyhow, let's take a look. That's the pound yen. So this is how you can use those moving averages, okay? But let's take a look at some other market movements. The euro dollar kind of inched lower. We're talking about 5 to 6 candles, not breaking that bottom here. So, well, it did, right? It did break that bottom, actually. It broke this low and it kept pushing lower, just very little though, very slightly. So it is the question, will it make that bounce or is it really going to break further? From my perspective, it needs to break above this resistance trend line, which I'll make a dark orange here, for an upside to be interesting. Or price would have to go back down to the 88.6 fib. It's now at the 78.6 fib still, Wait, I think yesterday, let me check where yesterday was. Yeah, yesterday was here. Still at the 78.6 fib. These could be bouncing spots. 78 and 88.6 fib could be bouncing spot. Of course, if it manages to break above this fractal, that could be your warning sign that price is going to make a rally here to the resistance and then perhaps higher. But if it keeps pushing, it keeps pushing. It's still a lot of candles. Sorry, every 5 to 6 candles, there's still a lower low. So there's good momentum still, enough momentum to keep it going, at least, let me say it this way. Now it is kind of slowing down here, so let's see what today will bring, whether we get indeed the move down. Yesterday we had an attempt to get down there, but it failed ultimately. You can see that on the hourly chart. Look, kind of like went sideways, then broke down, but then no momentum, no movement, and then retraced back and now down again. Nothing really happened that much. So still the same questions as yesterday. Will it make the dash down to the 8.6 fib and then probably bounce? Or will it bounce off the 78.6 fib? And then how will it react to this resistance area right in here? That's the next question. Will we get a break above it or a substantial continuation? Now, honestly, this could be traded both ways. I don't think that there's anything wrong with either trade ideas. But if someone is trading the break to the upside, then I want to see a significant momentum push through 110. What is this? 110.70. So I would like to see price basically do this, either break through it and make a correction and continue and to trade it somewhere in here, or this, even if it respects the trend line, but does make a bull flag and then starts to break that bull flag with a good candle like that. All right, so that would be upside scenarios. Downside, well, I would probably have to see, let me think here. I would have to see, let's check the 50-minute chart. And it perfectly indeed says there is a bit of divergence between these bottoms and technically it's a 30-minute divergence, a double divergence on the 30-minute chart. 1 and 2. On hourly, actually, we should be looking at this bump versus this bump. And ironically or interesting enough, if that doesn't show divergence somehow, it's quite surprising to me, actually, because would have expected it. And the 4-hour chart is roughly equal. That's a close call. Yeah, the hourly, well, you could do that on the hourly. You could say, okay, this is divergence, but I like to call it a 30-minute divergence because what I like to see is the oscillator go back to that zero line before comparing bumps. It's just kind of a rule that traders use. I use. So yeah, this is. I mean, all in all, though, this is clearly divergence between here, whether it's a 30 or a minute chart. It is visible. So downside, I'm not too sure. I think that if price gets up in here, let me take a look where the pivots are. Let's see, we got an R3 at 109.40. Ooh, that's a substantial distance. 109.40 is only here. Tight pivot points, I think. Well, obviously we are in a 4-hour chart in a downtrend, so if it let's see, if it shows any signals of turning, perhaps that could be a bounce trade. But I'm a bit hesitant with that. I'm not really jumping for joy in that scenario. I think I like the bullish breakout a tad more. But if it does show a bit of a correction channel like that and then breaks this trend line, that could be one way. Or if it shows exhaustion here, those could be still ideas to keep an eye on. And the price could fall down today to 80.65. The other scenario could be a break of this 15-minute trend line, these bottoms here, break of that. All right, that could be two, something to keep an eye on. Now, pound USD is not making the turn down. As you can see, we talked about it yesterday. That can it make the turn down, but it didn't. If we don't have the ADMA on this, but okay, let me quickly do that then. You see the ADMA not turning. And look at this wick here. So there was not significant downside pressure. And in fact, this could be a bigger correction on the pound USD. All right, so back to this chart. You can see that we didn't get the turn right here. So this could be an ABC zigzag, for instance, on the pound USD. Right, price stopping at the 61.8 fib. So if it gets up to the targets, that could be turning spots back down, because this is a downtrend, clearly on the daily chart, no doubt about it. Right, so if it gets to the Fibonacci targets, it could be clear turning spots for downside. So very interested in seeing a potential on the hourly chart here. If price gets up to 140.70, 141.25, to see if there's any reaction, and we'll be hunting for shorts. Dollar yen made the push up that we talked about, the potential push up to resistance yesterday. But it's still below bigger resistance. It's still below that resistance. It's still below big resistance, right? And anywhere in this zone, basically. All right, this could be turning spots. We had a couple of lines on there yesterday indicating all types of resistance levels, even up to the weekly chart here, right? So I wouldn't be confused about this. This upside could run for a while, but eventually I think we're going to see a turn back down. That's what I'm looking for. You could put fibs on from here to here, right? And you can see some corresponding fibs with those resistance trend lines. You can put a fib like this, and you can see some confidence with the targets as well. And that gives you a pretty neat idea that if price breaks above this top, that the next turning spots could be 116-ish and 117.25, 117.50. That's the area where I'm looking for downside again. If price moves up here, turns, I get into the trade, but then it starts to do this, I'm going to move it to break even, get out of the risk, or even exit the trade, because in that case, this is a bull flag, and there's a chance the price could make one more move up, or who knows, the whole dynamic could change. That's something, of course, I'm keeping an eye on as well. So short makes sense, but then a logical way to trade management is to keep an eye on the patterns that are being created after that. Aussie, still in this mess, still in this triangle, still waiting for a break either way before trading it, but it is hooking back to resistance. So bounce traders, range traders might find that interesting. We have a divergence between these two humps here. That's actually a 5-minute divergence, technically. And we got the 35th candle not breaking this high. So the first attempt to break below the 21 EMA band on the 15-minute chart. So if it makes a move up like that, shows kind of failure to break above this 21 EMA band, there could be a head and shoulders, a failure on the right side here, and then a bigger correction back down to, well, maybe it's support, for instance. Let's take a look at the pivots on this one. M2 is at 71.70. That could be one target, 71.70. The S1 is at 71.45. So that, I think, is possible. The hourly chart, we already have a pretty good bearish candle here. So we're definitely seeing some reaction, bearish reaction to this resistance zone. So a bit of retracement like that I think, lines itself up for a range retracement. Sorry, a range trade within this. No, sorry, a bounce trade within this range. Excuse me. Now, eventually, we're going to get a breakout. I don't know when, how long it's going to take. Ranges can take long. You can see this has been a mess for weeks already now. So let's see when we get the breakout on the Aussie. Kiwi, well, big fall yesterday and making this channel, but I would say the channel we had yesterday on the chart was like this. Oh, there we go. Well, anyhow, you get the point. 4-hour chart. Oh, this is a 4-hour chart. So anyhow, 1-hour chart, you can see the bounce here at that support, pretty mild, not so strong of a bounce, pretty corrective in fact. And what's dominating now is that previous fall. So we got a strong momentum, bearish, corrective upside. So from that point of view, it looks like it's more of a pullback for the upcoming break, on the Kiwi at least. Now on the daily chart, that would basically mean that price will break below the 21 EMA band. If it does close below, if there's a daily candle below this trend line, if there's a daily candle close below this 21 EMA band, that could be, in my opinion, the signal that makes this a bearish environment. The day after, a small pullback could be an interesting short with a stop loss above there or above here. Dollar CAD kept pushing lower. Now there's a divergence on this 1-hour chart. I think there was already divergence on the 4-hour chart. There was, but not on the hourly, in fact. I'm not sure if we looked at that yesterday. The hourly didn't have it. So that's always an interesting thing to remember. If the 4-hour has it, but the hourly doesn't, then that's something that, gives us a bit of caution to be careful with any reversal ideas. All right, pound odd made the turn after a lengthy upside. It was finally this candle that made the ADMA turn back down. An entry there was at 194.80. Stop loss above the high, could have been 100 pips. Above the top, could have been 130. And price is falling in the meantime, some 200 pips. Now the official target that I mentioned was 190 or 190.50 if you want to, you don't want to aim for the very last pip, right? Price is seemingly bouncing a bit off this bottom. We can see it. So anyone who took that trade that I mentioned yesterday on the pound odd downside can move to break even too, because the stop loss can be put above this candle. This is the master candle at the moment. And if you didn't take profit in the meantime, which makes sense. I mean, if you wanted to take profit, that's fine, right? Obviously, that's your choice. But if you didn't, then you perhaps were thinking about the target that I mentioned, then you're still in the trade. And in that case, I would suggest then, up to you of course, but I think it's a good time to take the risk off the table. And we just move it to break even. Nothing lost, that's great. So you can, I can use that trade management philosophy of mine to say, now I can be a bit patient again. Why can I be a bit patient? Well, because this is a very strong candle on the 4-hour chart. It's, maybe very exaggerated, but it's definitely strong. If you compare this candle to these, that's all bah and nothing. These are strong candles, where I have the green circles. So we got that candle in our favor. That's great. That's all we need at the moment. We got it at break even. Remember, be patient at the start, then when possible, move it to break even, or when the time is running out. So we have it at break even. That's goal two accomplished. So now it's time to be patient again and try to see if you can get the bigger winner out of it. Sure, if you did take some profit down in here and got a 1-to-1 trade or got 1.5-to-1, there's nothing wrong with that. But occasionally, as I said, getting a bigger win and getting a 4.5-to-1 or 4-to-1 trade is great. In this case, that would be a 4-to-1 roughly. It depends exactly where the stop loss is and where you put the take profit. It could be 5-to-1, it could be 3.5-to-1, it could be 4.5, it could be 4-to-1. All right, so that was yesterday. Anyone in this trade by any chance? Remember we talked about this was basically the bear flag within downside momentum, looking for the first turn here, or the next turn, I should say, for further downside. So we got two trades at the moment that were mentioned yesterday at break even, pound yen upside and a pound odd downside. All right, just keeping an eye on this. This is the first break below the 21 EMA, so I would expect a bit of retracement. You never know. You never know, of course. But that's what I would be waiting for at least. But I'm not a big range trader, as you know. But if from this point of view, I think that range trade makes good sense. Now, let's see. Anything else? Yeah, dollar CAD maybe. I would probably wait for 5 to 6 candles, not breaking this bottom. I'm not going to trade it or even look at it unless that happens because I would like to see more clarification that this dollar CAD is really turning. So I'd like to see, preferably, is before even thinking about a reversal trade, is price going up like this, then showing a correction channel like that, basically. Price bouncing off that 61.8 fib, and then showing the bounce. Something similar to this, like this pound yen, basically, right? A move up like that, failure, corrective down to 61.8 and bounce. That kind of formation here on the dollar CAD. Then a reversal trade could make sense. All right, besides the pound yen, upside euro yen is also retracing to the upside. And I don't see any trade at this moment. Price is at resistance, is at the tunnel. Or trying to push through it, I should say. Now, as you can see here, tunnel acting as resistance, 21 EMA acting as support. There could have been maybe like the pound yen here setup, but I like this pound yen a bit more personally. However, if price manages to get a couple of 4-hour candles above here and then retrace back to the 21 EMA, that could be a good setup. Back to the long term. So nothing in the immediate future. I think I forgot to mention pound USD. If it breaks through this bottom or this trend line, that could be something still to keep an eye on. All right, euro odd finally moving a lot lower and lower for those that are in this short and swing trade. Yesterday I had the stop loss up in here, right? Now I'm able to move it up above this high. All right, this is a master candle. This is the candle that pushed below these bottoms, below these support levels. This is the breaking candle that is showing a lot of power and strength. That candle can be used now as a trail stop. A trail stop that goes above this high, I think is great, and locks in about 120 pip profit for me. The trade was up a lot more. $180 more. Actually, the trade is up. I must have miscalculated somehow because it's up 240 pips. Let's see. Oh, now it's up 240. Yeah, sure. Of course. I'm looking at the current profit. Sorry. No, I mean, but I mean, the trail stop level is up, would lock in 120. Sorry. I'm confusing things. Okay. Now, from a take profit point of view on the year odd, there's serious reason to be cautious here because it's at a target and it's at a bouncing spot on the daily chart too. So some of you maybe wisely took some profit because it's pushing through the tunnel as well on a daily. And there's nothing wrong with taking profit at 150. Now I didn't have a take profit. Maybe I should have, in fact. I don't know. But it's easy to say in retrospect, of course, but we did have a target there. There were some things to consider. So what I might do is actually take a market exit as soon as it hits this band, turns, shows weakness here. That's where I would exit. Now, if it doesn't do that and just flies up, then I'm unlucky and I should have wish I would have put a TP. But you can do this forever. You can always think about what could have been a bit better, and there's no end to that. So it's always good to learn from mistakes and then move on, right? If this is a mistake, I don't know, but could have been a minor improvement to have a TP probably at 150. Maybe you did. I didn't. But I don't think it's a disaster. I still have 120 pips locked in, and there's still a good chance that there could be resistance here, make a hook back, show weakness here, and that's where I'll be taking that profit. All right. Does anyone have anything they would like to take a look at? I would like to talk to you now about the 3 steps to analysis. It's not going to be long, don't worry. It's just going to be actually I want to show you how you can do it the quickest way possible. But before I do that, I want to just make sure if anyone has a particular pair they still want to look at. New Zealand CAD kind of riding down this 8 EMA to the downside. Odd CAD did make a retracement back to the 21 EMA. Odd didn't break it to the upside. All these CADs still pushing. This 4-hour candle was perfect. Resistance right in the 21 EMA band, turning the 8 EMA. Perfect downside candle. And the master candle, I would say, is this one right here. So that's roughly break even, if anyone who took that short on the pound CAD as well. But there are a lot of pounds to trade, so. Odd yen, okay. Let's see. Let's see. It's trying to get a sense of what's going on in the higher time frames first again. Just a quick review here, looking at the candles. Yeah, this is, now I remember, this is that channel that we were talking about. And the impulse before it. So we could get a bigger ABC zigzag, right? Before we get maybe a turn back down, who knows? Daily chart is well in a downtrend, let's say. Yeah, seems fair. Weekly downtrend. So yes, this could be a correction to the upside, or this could be a move to the upside, but it could be a correction. So putting a fib from here to here, you can see target minus 272 target. So there's some space to the upside still. All right, hourly chart. So if the hourly chart makes kind of a retracement like that, back to the 21 EMA, kind of a bull flag type of thingy, corrective pattern triangle, then bounces off the 21 EMA, that could be that long that I think Roger mentioned too. Yes, indeed. Before he said that there seems to be broken resistance on daily and finding support. Yeah, that could happen indeed like that. Yeah, makes sense. But I personally would not be interested now myself, but we do have a lot of candles above the 21 EMA. So if it does hook back to that 21 EMA, I think it's a good bouncing spot. All right, so now I'd like to ask you one thing. Would you be the first one who picks a pair? That's the one I'll start with. Because I want you to pick a pair because I don't want to just randomly choose one. I might have already one in mind and mentally, unconsciously prepared already to explain to you. I would like you to choose a pair so that we can take a look at the three steps on a randomly chosen currency pair or instrument. I'd rather have currency pair when explaining this, but we can take a look at instruments after that. So the first one who can mention any pair that you would like to take a look at. Any preference. First one gets the win. Can be any